as that 500 disappears, start whacking in some trade. That's exactly what I've just done, and I've made a quick profit by, again, I've had another scratch at +1 there, because the big offers came back in at the top edges. So I'm not going to sell into, I'm not going to buy into, sorry, the top edges at the moment. That's not on the cards. I've got an active seller now showing up in my book, so there is an active algorithm selling down into the bottom edges here at the moment. That could be a challenge for the buyers, but that can change literally in a sixpence. Heavy stacked offers, do you see that? We went 700 offers and they pulled away the bid, but then they just caught the seller coming in too aggressively at the low edge, and they've managed to spin that seller around. I haven't taken a trade on that occasion, on that rotation. I just didn't get any type of a edge at all to jump in, so that's a little bit disappointing. It's the first buy rotation that I haven't been able to get a piece of, and I'm a little bit disappointed with that one. That means it's probably going to be a good buy side break, so always one of those kind of concerns that when you don't catch the trade and it's moved too quickly, it's going to be a buy side break. So you can always take a chance on it. Worst case scenario, if you get a stop at break even, which I've been able to get, if it breaks, it breaks, right? Nope, we got scratched at +1. So it didn't break, so that was okay. If it broke, we were in it. If it didn't break, we were good. Now the bids seem to be in charge of the shape here at the moment, don't they? The bids seem to be in charge of the shape here, but we've seen that turning literally in a fraction of a second. You can see the book at the moment, 300 bids, minus 110 offered. So that's obviously starting to allow us to think about buying on dips at the moment, which is exactly what I'm doing just now. I'm buying on dips, trying to capture a little bit of an opportunity. If I can see a good dip to buy into, of course, the ticks kind of offered just now, so I'm waiting to just slowly edge into that buy trade, make sure I don't overpay for the buy opportunity. And I've just been scratched out at break even, +1. We try it again. Just waiting. Just waiting. Still not seeing anything of interest at the moment, guys. Just very passive. We touched the bottom edge there within 1 tick. Gave us a nice easy money opportunity to get a quick trade on. Stops at break even. Let's see if it sticks around. Nope. We got taken out at +1 again on the buy trade there. You saw the book went flat into a kind of neutral position there, just into the bottom edge. We started to buy into that small, very small diverging storyline, but again, the book going offered just takes you into a break even without any trouble. They're certainly not willing to hang around. However, the tick's starting to catch a strong bid here. Tick is starting to catch a strong bid, so I'm going to be watching for an opportunity, maybe buy a little bit of back pressure into this bid. Which I've just got. So I've just been able to take a little bit of a back pressure buy trade there into that bid on the tick. And I've just caught a little cracker there as the price breaks north. So that was nice. So we got a little bid, got a wee bit of money off it. I tried to get a screenshot there, but by the time I'd got the screenshot, it doubled straight back off a divergent tick at the top edge. So it's still stuck in the middle. We've got an active seller on the books just now, so I'm not trying to get any type of buy trade off the bottom edge. You can see a very heavy offer and a big pull away on the buy side of the book. See it? Minus 600, with 400 being applied on the sell side. So there's no way you're ever going to buy into that, guys. So that's a nice clue not to try and buy it, to try and sell some back pressure into that drive lower. And there's the drive lower, guys. See it? So you could have easily have got into that drive lower way before I've just mentioned it. Easily got into that drive lower. We've just made $25,000 on that drive lower there. Now that's a good winning trade. That's a good winning trade for us. So you saw that there was a big change there. There was an offer came in the book. There was an offer came in the tick. There was no way you can buy into that. So we started to offer a lot of contracts into the 53, 54, 55 area. And we just let it rip through, and now we've made an absolute fortune on the sell side. That's how you work it. That's how you work it, guys. Killed it. Absolutely killed it. I think I'll be finishing up for the day on that one. That was a great sell. Easy money sell. Big tick divergence. And game, set, and match. Right, finished for the S&P at the moment, so I'm going to be looking at some of the other markets to see if we can pick up some business on some of the other places. We've got the big macro in that S&P absolutely nailed, considering we originally shouted the sell, and the reason why there was a sell there at 39.18s, it's now traded 38.50s, 40s. Yes, we know. Exactly right. 80 points, $4,000 lower since last night's tweet. It's not often you can get that in the retail space, is it? That type of information, because it's up to you to then be able to recognize it and translate it and understand it. Last night's tweet, we gave you a very clear thought process for that logic of the trade. So you can understand that on this occasion, and it is obviously, well, whether it's a catalyst takes place that gives you the trade, but on this occasion you can see just how amazing that trade was. This has been the reason why this whole trade existed in the first place. This is the reason why that whole trade existed, guys. My upside concerns for equities, the divergence between the bond basis at the front end. Yields are too low versus a market expectation, which is one reason we managed some original solid gains in equities. So based on that conversation, we put offers into the tops. We've just went from 39.18s to 38.40s for a massive $4,000 swing sell side based on a strong GDP print. Based on a strong GDP print. So we can start to see this storyline, right? We can actually start recognizing this storyline as being a reality of what's happening in the marketplace. The second reality was, of course, for us, it was that big breakthrough, the key strikes. We've talked about this many times. We highlighted this possible problem earlier on today as well. Take a look at this possible problem here. Do you remember that tweet there, guys? We said if we lose control of this key area here, that the game's over for the buy opportunity. You see that? Game's over for the buy opportunity if we break that, because that could open the floodgates for the sell. If the dealers can't hold this price bid, and they tried it yesterday, they tried it today, and then they lost control of this massive RGL. Massive RGL for the NASDAQ. And you can see it's the massive RGL. We gave it 3 M's. Would you believe it? We gave it 3 M's on this level, guys. Not just 1 M, not 2 M's, 3 whole M's. You may say, and what? Because the more M's, the bigger the dealer level. Look, 11,275, 11,300, 3 M's as the key decision level for the dealers. So when it breaks below that, the dealers don't have a choice. Dealers don't have a choice. Sell side only business. And down the price goes like an absolute train. So you can start to spot these elements, can't you? You can start lining up these elements across the screens. And obviously it just kept going, it just kept moving. And when we took out this dealer volatility level here at 210, and the dealer wasn't able to hold on to that, that's when they have to hedge. There's 100% certainty they've got to hedge if it goes through the volatility levels if they can't defend it. They tried to defend it, they never succeeded. You'll see that from your S&P charts. You'll be able to see that perfectly from the S&P tweet. They tried to hedge it, didn't they? What do we mean by that? Take a look for yourself and you tell me. Here's the S&P, guys. So what did they do at the volatility level? What did they do at the volatility level there at 70? Remember, we told you this level. We said this is the most important level here at 70. They tried to hold the 70 bid. They tried desperately to hold the 70 bid. They stayed bid, buy side, buy side, buy side, buy side. They couldn't take the market bid. Nobody bought above it. So as soon as they failed to take the 70 bid, the dealers had no choice but to jump sell side into that trade there. And that's where you saw that sell coming from. And they never tried to defend any other level. Simply haven't tried. They tried to stick the price in here, which did it okay. We managed to make some nice money there as a scalper. And obviously, again, they couldn't take any buyers at higher prices. So the market maker again had to come back in again and sell some more gammas at the bottom edges. And that was it. That was the game, set, and match for the buy traders, wasn't it? And we jumped sell side for the next leg lower, and we made some really, really nice money. That profit is now way over $60,000 on that sell now, which is pretty good.